Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome. This is the Investor Coaching Show, the last Investor Coaching Show
for the year.
Oh, you just ruined it. Ira.
For the year.
Ira worked with me, of course, and Evan Barnard. It is the last Investor Coaching Show for the year. Yeah, we don't want it to be the last Investor. Do you guys realize?
No.
Yes.
Maybe.
We're going on 23 years.
Yes.
23 years.
On the radio? Or
Yeah.
wow.
Hey, you know what? Tomorrow is going to be a big day for? Of course.
Yes.
Yes.
We were talking about this at home.
Weddings.
Yep.
Uh-huh. Yep.
Did you guys saw that, right?
I saw that,
Yeah,
yeah.
because that's our anniversary anyway.
Huge.
Huge, yeah.
Oh yeah, I have another friend whose anniversary is
30 years this year.
30 years.
Sir.
Well, 30's got a 3 in it,
Yeah.
which is if we play a waltz, it's in 3/4, right?
There
1,
you
2,
go.
3, 1, 2, 3. You guys do a waltz, for
We're set.
for your anniversary because it's 1, 2, 3, 1, 2, 3. Yeah, there you go. It is going to be a big day in Las Vegas, is what they're saying.
Yep.
It's like one of the biggest days. They said it's one. It is, and I think it is going to be the biggest day. I think
At least for weddings, yeah.
that they have ever had is what they were saying. It's going to be the biggest day for weddings that they have ever had. They said that there are all kinds of people cashing in on this. But they had like in 2007, you had 7 of 7. I got a lot of people. July 7th of 2007, a lot of people got married. 4,500 couples were married in what became the Lucky Sevens Day in Las Vegas.
Okay.
And then the second most popular was 11/11 of 2011.
I was going to say November 11th of 2000.
Yeah, there you go. So they're looking at another big day in Las Vegas tomorrow. And they've got these people out there selling packages.
Yeah.
The 12/31/23 package, they're selling it for $2,024. That's pretty creative. Yeah, they're selling. The idea is that you get a limousine ride, wedding planner, photo shoot, and a cider toast.
Cider toast.
Cider toast.
Oh,
They're going to toast you with
instead
cider.
of champagne. Yeah.
Yeah. Yeah. Speaking of toast, there was a guy that came up with avocado toast passed away. Did you see that?
No, I didn't.
Yeah. Who would ever thought
I
of
saw the
having
creator
avocado?
of the Glock passed away this past week.
Creator of the Glock?
Yeah, he passed away.
No
He's an
kidding.
Austrian engineer. Yeah.
Okay. Yeah, I don't know much
And
about
I think
that.
he was like 94, something
Okay.
like that.
All right. Well, so it's and then the next date that there's somebody else is saying that's going to be too crowded on 1-2-3-1-2-3, so she's going to get married on 2-4 of 24. And she's going to wait a couple months. Maybe she's got to think about it first.
Is Vegas making the odds on the success percentages of these weddings on
I have
New Year's Eve?
I have not seen that. So it has been an interesting year. Evan, you've been talking to your son about it, and
Yeah,
I'm sure
it has. We've been chatting
He has
at home.
he has a nice little list of things.
We did, yeah. We went through a few things, and some stuff I just had totally forgotten about. I mean, it's a function of the news cycle now that there's so much coming on that I had failed to remember several pretty good sized stories.
So there were a
just
lot
out
of
of sight,
predictions.
out of mind.
There were a lot of predictions for the year. And I think it's interesting because one of the things that I've talked about on the show over and over and over again, how the experts can't seem to predict things,
Right.
right? Not so good at predicting what's going to happen next, where things are going to go, or anything like that. And there was a piece in CNBC. There was one of the anchors was talking about that very thing, the Federal Reserve and their economists. The most brilliant economist, the most educated economist out there, period, end of sentence. Check this out, guys. Here's what he said.
But I have pointed this out many times, has a terrible forecasting record. I just want to point out their GDP forecast this time last year was 0.5% for 2023.
Okay, so GDP, 0.5% is what they predicted it would be. This is the Federal Reserve, whose job is to set interest rates, right? Help determine, make sure that you have full employment, make sure that the currency is stable, and that that's their mandate, their dual mandate. Now, this is what they basically said: 0.5% growth in GDP, and this is what really happened.
And the actual numbers, we had 2.2% for the first quarter, 2.1, 4.9, 2.7%. They were off by orders of magnitude. They were off on the unemployment rate too. They had 4.6%, we're 3.7. They've just been.
Now, it's not quite as bad as he's making it out to be, because he was like 2.4%, because he's annualizing all those numbers. So you take the quarter, you got to divide that by 4. So, you look at that, though. But that is a pretty doggone big percentage to be off when you have all the numbers at your disposal.
Yeah.
And, it's just like, one of the things he made a comment about, he says, this was predicted for this. And he said, then COVID happened. Talked about, several years back, of course, thankfully. We can look back and say that was several years ago. But he was looking at that and saying, they were way off. Then COVID happened. Well, but this is what happened. This is our excuse for missing our prediction, because COVID happened. And his point is, but COVID happened, it's like, but 9/11 happened. Yeah. But, the oil crisis happened. But you can fill in the blank. There's always something that screws up your predictions.
Yep, exactly.
So, I'm curious, Evan.
Yeah.
What'd your son come up with what were some of the things that he popped out?
Yeah. So I'll start with the curveball here. The Titan submarine sank. The submarine that was looking for the Titanic, had the wealthy billionaire or whatever, and
your son would come up with
all that kind of stuff.
Yeah,
that went down, and of course, all the news cycle. How much air do they have? How long is this going to be? All those kind of things, and of course, in the commentary on the business side, okay, it's almost like the space shuttle. What failed? Okay, what design flaws weren't we looking at? Oh, they rushed the process. I mean, you always have, just like you're talking about the economists after the fact.
Yeah.
Well, we woulda, coulda, shoulda.
Monday morning quarterbacking.
Yeah, for sure.
Right. And there were a lot of things about as I recall, there were a lot of things about how these people were kind of fly by the night, type of an operation anyway.
You mean the designers of the sub? Yeah.
And but
well. Yeah, I hesitate to use the term fly by night, but
I don't know much about it, but I remember that was the commentary.
Yeah, they were kind of rushing this. It was maybe an unproven. I'm not an engineer, like the polymer, the ballistic nylon shell or whatever, Kevlar almost.
Because there were a lot of wealthy people on board that thing, weren't there?
Yeah,
they were all wealthy people.
Yeah, well, there was. Yeah, were they?
Yeah.
Yeah, so that's just what I recall about that one. Okay.
Yeah,
It
but
had no business going down there.
I'd totally forgotten about that story.
They had no business going down there.
I don't know.
They've been told and warned.
They've been warned.
A lot of times.
Well, I mean, you look at it, the sense of adventure. People want to go out to outer space. I mean, that's just humans.
Yeah, get a robot down there.
Columbus had no place going, across the ocean.
Right.
When you were going to probably fall off the edge, but it's no guts, no glory, right?
That's it.
So what else did he come up with?
Well, let's see here.
Because the bank thing, I'm thinking about people that. Well, I was interviewed over.
Silicon Valley Bank was one I came up with.
Yes.
That wasn't Justin's.
Right.
You want me to run through the list or just?
I'll just come up with a couple things. We'll talk about them.
Well, the Chinese spy balloon.
Yes. You're right. That did happen this year.
Yes, it did.
Wow.
And we were actually, this kind of led
that was that was in the news a lot. And it's funny how quickly we forget those types of things.
And that wasn't really, that's not so much of a business event. It's not a market related thing, but at the same time,
but it sure can affect business, seeing as you're talking about trade between countries and whether you have trust between the countries. Yeah,
exactly.
Sure.
And, so that was one. And then, what was an interesting one was the popularity of two very different movies, Barbie and Oppenheimer. And how
my wife is she was an avid Barbie collector. Totally, she just won't go.
Totally different ends of the spectrum.
She won't even watch it.
Yeah.
That's funny. Yeah. Well. Yeah. But Oppenheimer. Yeah. I just thinking about Oppenheimer. I haven't seen either one.
I haven't either.
I mean, I don't watch movies. You guys know me, but I think Oppenheimer, that'd be fascinating. I guess. Did you think? Did you see that? Or?
No, I did not. Yeah, I see a lot of movies.
Justin has seen them both, and he really loved both of them.
Did you really?
He did. Yeah.
Okay.
Now, this is on the business front.
Okay.
But it's kind of left the headlines. But the Bud Light, Dylan Mulvaney.
I was just thinking about that
beer can debacle.
Yeah.
And that's now old news. Their stock hasn't rebounded much.
The beer sales down 24% for Budweiser.
Yeah.
Yeah. Well, it's. I guess that maybe that memory of that is holding strong with the people that were offended by the whole thing.
I think so.
Interesting. Yeah, because it was like Nike was this big deal, right? And then all of a sudden Nike rebounded, and I don't know where Nike is. You guys even watch that? Because that was a big, controversial company.
I missed that. Yeah,
and that's another example of just one of those things when we talk about investing. You don't know when something like that's going to happen.
Exactly.
To a company near you that they all of a sudden they do something that is out of step with culture in one way or another, and all of a sudden they are here today, gone tomorrow, or at least drop in value significantly. You think about Walt Disney and Disney and how that whole thing went down.
Well, and you think about not even this is news. It's a surprise. It's not like a natural disaster, but just as recent as a month or two ago. Sam Altman getting relieved, dealing with OpenAI and ChatGPT and this, power play between Microsoft and all of that. Sure. All of that stuff can happen. That whole story started and ended and changed in about 72 hours.
Well, yeah, there was actually some talk about that in the Wall Street Journal. I didn't really get through the whole article. It was talking about, will 2024 be the year that some of those cryptocurrencies that maybe they're going to be more legitimized because maybe some regulation will show up around them. And you think about it, people have been using it, quote, as an investment. And as we've talked about so many times here, it's not an investment. An investment by definition is something where you have a cost of capital, but it's been going up and down in value, and their volatility has been unreal. If some of that regulation comes to fruition, you could see some of that volatility going away. And then you could see that not that it would be a good investment at that point in time is not what I'm saying.
You could regulate ice, but it's still going to melt.
but you could see the volatility or it stabilizing more like, you think about gold as not necessarily tremendously stable by any stretch of the imagination.
Yeah.
But it has been far more stable as far as not, these wild spikes and drops that we saw with cryptocurrencies, with Bitcoin particularly. And it's funny because we talk about Bitcoin all the time. Why? Because it was the one out of thousands and thousands of cryptocurrencies that was the winner. It's just like anything else with stocks, right? Mm-hmm. We don't talk about a stock in glowing terms until after it's been the winner for a while. Yeah. And we know, you hear all these other companies that have come and gone.
Well, I think Bitcoin was the winner primarily because it was really the first one to come out and get publicity of all of the cryptocurrencies. And then they all tend to follow them. And now there's just too many of them. And they're not currency either because there's nothing backing it. And currency doesn't fluctuate on a daily basis the way the swings of these crypto things actually fluctuate.
Well, I think it's more like, I would say it's more akin to gold, though. In essence, that gold fluctuates pretty significantly based on supply and demand because people see it as a store of value that's outside of the monetary system, unlike another currency.
But gold you can at least put in your hand.
Right. Okay. Right, you can. It does have another use.
Yeah,
that's a good point.
Well, but regardless, gold, whether you use it for something else or not, like silver, is probably one of the most used metals of all of them for industry. Mm-hmm. You see it in soldering and circuit boards and so forth.
It has a utility outside of just
but you can just hold it. You can't hold cryptocurrency.
Right.
Because there's nothing there.
Are you saying this is precarious in any way?
I'm just saying. So, for example, like we have the cash, percentage of the portfolios in cash. Why? Because the dollar doesn't fluctuate up and down like a stock or a bond does. It's not sensitive to interest rates. A dollar is a dollar is a dollar. My dollar today will be my dollar next week.
Well, you have an entity that's making sure that there's stability going on there, like a Federal Reserve. And whereas, like, you look at some countries where their currency has fluctuated wildly, just because they print and they increase the supply, and then you have hyperinflation. And,
Venezuela, anyone?
And,
can you say that? Yeah.
And that's the only reason why I just lost my thought. That's the only reason why the dollar for us is so stable, and why we keep a certain percentage of the portfolio in the dollar, because unlike the stocks and the fixed income, it's not going to fluctuate in value. It's the only security, if you will, that doesn't fluctuate here. Now it does to other currencies around the world.
Right.
We can see the dollar went down compared to the pound, or the dollar went up compared to the euro. But the dollar for us is always a dollar, as opposed to Apple dropping in value or interest rates going down, so the value of the bond goes up. The dollar is fixed for us.
Right. And it's a good point to make, Ira, just in that when you're investing and you hold bonds in your portfolio, they're there for stability. And if you do have bonds outside the U.S., and a lot of people have these things, and they don't know whether their bond funds are actually hedged against the currency risk. And that's one of the things that we're adamant about, that we have that hedging against currency risk, because you don't want that to be fluctuating. Listening to the Investor Coaching Show right here on Super Talk 99.7 WTN. Paul Winkler, Ira Work, and Evan Barnard. We'll be back right after this. Hey guys, if you want specific advice for your unique situation, schedule a free 15-minute phone chat with one of our trusted advisors by going to paulwinkler.com/call. We don't sell any products, and our advisors don't make any commissions, so this isn't a sales call. We have a coaching process that helps you understand investing and relax about money. Don't put blind trust in anyone with your financial assets. We want to partner with you in the process so you know what you're doing and why. We manage assets on a fee-only basis, which means that when you do well, we do well, which aligns our interests with yours from the start. We also bring you into the financial planning process that gives you a clear plan so you can find the freedom to pursue your purpose. All our advisors are degreed planners too, with years of experience. So schedule a free 15-minute phone call with an advisor by going to paulwinkler.com/call. All right, we're back here on the Investor Coaching Show. Paul Winkler, Evan Barnard on keyboards. I should have put the camera on earlier. Let's see. And Ira Work. So, speaking of predictions, there was an article in Wall Street Journal. What did Wall Street get right about markets this year? The answer was not much, because we've been basically 23rd year going into this radio show, and that was one of the things we started on. Is like, what passes as investment advice is terrible. People don't, and most people don't realize that's what's going on, is gambling and speculating and predictions about the future, and you'll see changes in your portfolio, or most of the times you don't see it because you don't look. But there are things going on, and you don't realize that's what's happening. It's like built into our bodies that we have to try to predict what's going to come next. But they said almost no one thought 2023, almost no one thought it would be a blockbuster year for stocks. They could have hardly been more wrong. S&P finished up 24%. That was the winner for the year. More about that in just a second. A year ago, everyone from the strategists and Wall Street banks to rap artist Cardi B, I don't know. Did I say it right?
Yes.
Okay, yeah. All right. Was calling for a recession. Instead, inflation continued falling, consumers kept spending, and the unemployment rate fell to 3.4% Lowest level since 1969. It was interesting. You guys see the 10-year bonds.
Yeah.
Basically ending the same place where they started the year before.
Yeah.
Which I thought was fascinating.
Yes.
So we had this big run-up in interest rates, scaring the living crud out of people, causing all kinds of problems for the banks.
Yes.
Silicon Valley Bank, and then more about that. There was something about that. I'll talk about that a little bit later. But it caused all kinds of problems. And then they end up back down where they weren't. Now, the thing is that you can have where interest rates go way up and they come back down. And what caused the banks all the problems were the interest rates going up because of the bonds that they held.
Yeah.
Well, by the time they came back down, it was too late. Mm-hmm. You think about that. It was too late. Why? Because banks aren't supposed to be taking risks.
Right. Well, it's like shorting a stock almost. I mean, it has to happen in the amount of time before you've got to pay that stock back.
Good example.
To have the market move. I mean, it's just the same phenomenon. It's the time value.
Yeah, exactly. So they had here that it was literally the inflation rate or the unemployment rate they talk about here went to 3.4%, the lowest level since I hadn't caught that. The lowest level since 1969.
Wow.
Lowest unemployment rate. Now, of course, the unemployment rate, what it doesn't contain are those people that have decided not to even look for jobs.
Right.
So that can be a little bit misleading. But in one of the biggest surprises of all, higher bond yields didn't turn out to be the boogeyman that many money managers feared. The historic bond rout that drove 10-year treasuries to 5% in October for the first time in 16 years sparked a stretch of stock volatility, but it didn't stymie the rally for long. Of course, partly because the interest rates came back down. They didn't put that there, but that's part of the reason that it didn't stymie the stock market rally. I remember learning that word in when I was in ninth grade. I had an English teacher who was so proud to teach us that word. Wall Street finally conceded that TINA, or the notion that there is no alternative to stocks. This paragraph I thought was interesting, guys. That it was over. They conceded that there is no alternative to stocks is over when a record torrent of cash flooded into money market funds. So basically, remember what they were saying is that, bonds have gone down in value because, interest rates went up and then stocks went down with bonds. Mm-hmm. And they were basically going, there's no place to hide. I mean, what can we do? We don't have any place else that we can go.
Yeah.
So what happened is you heard a lot of that earlier in the year. There's no alternative to stocks. There's nothing else to go into. I mean, some people will try real estate and, commodities and all that other junk. But, technically that was the thing. So what did people go to but money markets?
Yeah.
Which I thought was interesting. Mm-hmm. It says they had a torrent of cash that flooded money market funds, the hottest investment for the year. Can you just imagine people walking down and just kicking themselves?
Yeah.
Who bailed out of stocks and jumped into money market accounts and going, yay, I got a 3% yield or whatever.
Yep.
For the year.
Yeah.
When stocks, as they said here, the 25% jump up almost in the S&P 500. Ouch. So it says when everybody's on the same side of the boat, it's time to look to the other side, said veteran investor Leon Cooperman. Well, the only problem is by the time you're looking to the other side, the movements have happened already, right?
Yeah. I had a conversation about that just this last week and, was talking with someone and actually it was a client and her daughter were in the office. Mm-hmm. But I've had the conversation with a few people and basically the discussion was, well, why would I put something in the market when I can get 5% guaranteed, right? I mean, that was just basically the deal.
Yeah.
And you're thinking, well, last year you weren't getting 5% guaranteed.
Right.
You were getting, 1, or maybe it would climbed up to 2, but you're looking at today's rate. And then just from what you said earlier in the segment, I got my 5% guaranteed, but the S&P was up 24.
And go further in the article, soaring interest rates caught a number of regional banks flat-footed.
Yeah.
So, you look at that and go, you had Silicon Valley Bank deposits, the value of the bond portfolio dropped, and then First Republic Bank, that collapsed. I mean, you had a lot of these banks collapsed, and you go, well, wait a minute, what happens when that happens? If we look at these things, we look at these guaranteed things, insurance companies, as I've often talked about, people say, well, the insurance company, and say, well, who's going to back the insurance company if it starts to fall apart?
Yep.
You look at markets and you go, well, yeah, the interest rate was higher, but why was the interest rate higher? Because inflation was higher.
Right.
Well, what is the hedge against inflation? It's certainly not fixed income investments in banks or CDs or insurance companies or anything like that. It's always been equities. That's why we want to own it. And it's the very thing you run away from when you need it the most. And good point. I mean, it's just...
go broke safely.
Well, I mean, that's unfortunately what ends up happening so often. People do that and they try to avoid risk. I use the example of me playing football when I was in 9th, 10th grade. I was a terrible football player because I was always trying to avoid getting injured.
Yeah, that's why I played like one game of lacrosse. I hit by 3 people and said, I'm done. That's it. No more. I don't need this.
I'm done.
I'm done. But,
you can't pay me enough to put up with this brutality.
I swam and played tennis, so, I wasn't going to get really injured doing that. But, when people would ask me, well, why should I take my money in the market when I can get 5% in the bank in a CD? My answer is no, that kind of makes sense. Just lock it into that inflation that's at 7 and just lose 2%. Know that you're going to lose 2%.
Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. You want to learn more about what we do, go to our website, paulwinkler.com. You can watch some of the videos there, and if you're not already a client, you can set up a free initial consultation. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.